Imagine purchasing a $50,000 Profim account and immediately going into a losing streak where you lost 4 back-to-back trades and the account is already half blown. You may feel that probably you're gonna fail this challenge. This is exactly where I was 1.5 months ago when I first purchased this challenge. I was in an overall loss of minus 5% and I started doubting my abilities even though I had been profitable in one of my funded accounts for the last 6 months. In spite of being in drawdown, I trusted my strategy and took a couple of trades and managed to get this account almost back at break even. I also decided to record every trades that I take in this account from here on. In the previous episode, we just took one trade which ended up falling all the way till 1:10 in profits, which alone would have helped us to pass the challenge, but here's the catch. Before price dropped in our favor, we exited the trade, incurring a total loss of minus 1%. Imagine entering a trade exactly at the top from where the markets dropped all the way till 200 or 300 pips in profits and you not being able to make a single dime from that trade. It sucks, but it is what it is. If you haven't watched the first episode, then do give it a look. I'm sure you will love it. I'll pin that video somewhere on the screen. Now coming back to this second episode, currently our account is sitting at an overall loss of minus 2% from the initial balance. Let's hunt for any trading opportunities this week and hopefully get the account back in profits.
It's the start of the week and we just entered for sells, so we got filled in. And now let me do a breakdown of why I entered this trade. First of all, as I scaled down to the weekly time frame, at first the previous week closed bullish and the markets broke out of this consolidation that it has been in for the last 2 months. Then once I scaled down to the daily time frame, I saw that this up move was initiated from here. So market was more of an overextended for me, and I do think that market has some potential to come towards the downside. And then I noticed this beautiful supply zone in the daily time frame. And then once I scaled down to the 4 hourly, what I could see was that price came to this level, price came to this level and closed with a wick. Then the next candle again tried to push up, but it closed with a wick again. So it says that the markets are exhausted and now bears are gaining control and we might see some downside from here. So these two candles said me that there is a very highly likely that price might go down, and then we also have a lot of imbalance to be filled towards downside. As you can see over here, in this up move, we do have a lot of imbalances to be filled in the 4 hourly. Then once I scaled down to the hourly time frame, I saw this beautiful consolidation. Once price broke this consolidation, I entered the trade in front of you guys with my stop loss above this wick for 20 pips. Let's edit it over here. 20 pips, and our target is gonna be 1:2 on this trade. So we are targeting 40 pips on this trade. Though I will be mindful of this level over here because this might act as a demand zone and price might go up in the short run from here. But I don't think that this level would hold for a prolonged period of time because liquidity is the king and we have liquidity over here. What it essentially means is that there are a lot of stop losses below this level. So I'm targeting this liquidity over here for 1:2. And for this trade, I risked 1.75% since this was one of my A plus setups according to my trading plan. And 1.75% risk on a 20 pips trade is 4.375 lots. So I ended up entering 4.38 lots sell in GBP USD over here. And currently the PNL is sitting at $100. I also entered this trade in one of my funded accounts. Let me try to show it over here in my 50K funded account. So yeah, I will update you guys on how this trade turns out to be. This is an update on the trade we took on GBP USD over here. And right after we entered the trade, price went against us. And the highest it went was around 17 pips. So two important lessons that I want you to take from this trade is number one, the importance of setting correct stop losses, and number two, the importance of setting correct take profits. So for example, what most traders would do in this scenario is that they might place their stop loss above this wick and they don't give enough breathing room to their stop losses. You need to place your stop loss at a level where once price breaks that level, your trade becomes invalid. So I had set my stop loss over here because I knew that this was a lower high, and if price breaks through this level, then there's a high probability of GBP USD going towards the upside. And that is exactly what happened. After we entered the trade, price went up to create another lower high and then it dropped in our favor. It did not break through this lower high. And again, our exit was quite perfect as well. We had this liquidity. We were not greedy enough to target for 2.5 RR or something like that. Then it would not have hit our take profit till yet. Who knows, maybe it will in some time. We do have unemployment rate news in half an hour. So we never know what news is going to do. But we were not greedy enough to target more on this trade. We took our 1:2, price exactly came up to our take profit, rejected, and then it went up. Now, if I even show you my Swift funding dashboard over here, as in the previous episode, our account was at an overall loss of -2%. And now you can see our account is back in profits and is at plus 1.57% because of the trade that we took yesterday. We risked 1.75% to gain 3.5%. And unfortunately, I can't show you the DXTrade platform right now because of the migration from DXTrade to CTrader that's happening in Swift Funding. But overall, yesterday's trade gave us a total of 3.5%. And now our account is back in profits. And hopefully, we can reach our targets by the end of March.
So it's the end of another week and we just took one trade this week. We risked 1.75% on this setup since this was one of my A+ setups aiming for 1:2 risk to reward ratio. Initially that trade went against us and was a few pips away from our stop loss was when I took out my secret weapon. By the way, don't share it with anyone. The magnet, which pulled the price all the way back to our take profit and we won that trade. So with just one win, our account is back from -2% to plus 1.5%. This also shows the power of positive risk to reward ratio. Hopefully, we can continue this momentum moving forward and pass this account by the end of March. Now, if you haven't watched the first episode where we missed a potential profits of 300 pips, then do give it a look. I'll pin that video somewhere on the screen and we'll catch you guys in the next week with an update on this challenge. Till then, take care. Bye-bye.